Welcome to this complete swing trading course designed for beginners and experienced traders. In this video, you will learn step by step how to trade like a professional swing trader. We'll cover everything: strategies, tools, psychology, risk management, and common mistakes. Swing trading is one of the best ways to earn profits without sitting in front of screens all day. The goal is to give you a full roadmap in just one video. Make sure you watch until the end because every section builds on the last. Grab a notebook and pen, because this video can change the way you trade forever. What exactly is swing trading? Swing trading is a style where traders hold positions for a few days to a few weeks. The aim is to capture price movements during short to medium-term trends. Unlike day traders, swing traders do not need to close trades before the day ends. Unlike long-term investors, swing traders do not hold positions for months or years. Swing traders focus on patterns, price action, and market psychology. This approach allows you to profit from both rising and falling markets. It's flexible, making it a great choice for people with jobs or busy schedules. Why swing trading can be a smart choice? Swing trading gives balance between profit opportunities and lower stress. You don't need to watch charts all day long like day traders do. You can trade part-time while focusing on work, study, or business. Profits can be significant even with smaller trading accounts. Swing trading works across stocks, forex, crypto, and commodities. It reduces the emotional pressure that comes with rapid-fire trading. Many traders prefer it because it provides freedom and lifestyle flexibility. How swing trading fits in different markets. In the stock market, traders look for companies with strong price movements. In forex trading, popular pairs like EUR, USD or GBP, USD provide good swing setups. In crypto trading, Bitcoin and Ethereum are highly volatile and perfect for swing trades. Commodities like oil and gold often show strong multi-day price swings. Index ETFs such as SPY or QQQ allow safer swing trades with broad exposure. Swing trading works in almost any market with enough volume and liquidity. This means you can choose markets that best suit your personality and risk level. Tools: every swing trader must have a reliable trading account with a broker that offers low fees and fast execution. A laptop or smartphone with stable internet to avoid connection problems. Charting software like TradingView or Think or Swim to study market patterns. Stock screeners to quickly filter the best stocks for swing trading. News websites like Bloomberg, CNBC, or Yahoo Finance to track global events. A trading journal to record every trade and learn from both wins and losses. A risk calculator to plan stop loss and position size properly. These tools save time, reduce mistakes, and give you a professional edge. Key swing trading strategies explain trend following: buy when the market is moving up steadily and ride the trend. Breakout trading: enter when the price breaks above resistance or below support. Pullback trading: wait for the market to dip temporarily in an uptrend and then buy. Reversal trading: trade when the market shows signs of changing direction. Moving average crossovers: use the 50-day and 200-day moving averages for signals. RSI and MACD strategy: buy when RSI shows oversold and sell when overbought. Support and resistance levels: buy at support and sell at resistance repeatedly. These strategies give you multiple options to adapt to market conditions. Swing trading chart patterns to know: head and shoulders signals a reversal in the trend, often from bullish to bearish. Double top and double bottom suggest price is ready to reverse after two failed attempts. Flags and pennants, short patterns that show continuation after strong moves. Triangles show price consolidation before a breakout, either upward or downward. Cup and handle often signals bullish continuation in stocks. Wedges suggest the price is tightening before a breakout or reversal. Recognizing these patterns early helps you enter at the right time. Technical indicators for swing traders: moving averages smooth price and reveal long-term direction. Relative Strength Index, RSI, identifies overbought and oversold zones. MACD helps spot momentum and possible reversals. Bollinger Bands track volatility and show breakout opportunities. Volume indicators confirm if price moves are strong or weak. Fibonacci retracement helps identify pullback levels for entries. Stochastic oscillator signals overbought and oversold conditions. Using indicators with price action increases accuracy and confidence. Risk management, protecting your money. Always set a stop loss before entering any trade. Never risk more than 1 to 2% of your total capital on one position. Position sizing ensures you don't lose too much in one trade. Diversify across sectors to reduce overall risk. Don't put all your money into one stock or one asset. Avoid chasing losses with revenge trading. Focus on long-term survival rather than short-term gambling. Remember, protecting capital is more important than chasing big profits. Psychology of a successful swing trader. Patience is the key. Wait for the right setups. Avoid emotional decisions driven by fear of missing out. Stick to your trading plan even when tempted to deviate. Accept losses as part of the trading journey. Don't get overconfident after one winning streak. Discipline matters more than intelligence in trading. Confidence grows with practice and experience. A strong mindset separates winning traders from losing traders. Common mistakes beginners make: trading without a clear plan or strategy. Ignoring stop-loss orders and taking huge losses. Overtrading by entering too many trades at once. Risking too much money in a single trade. Following social media tips without research. Forgetting to review past trades and learn from them. Treating trading like gambling instead of skill. Avoiding these mistakes can save years of wasted time and money. Step-by-step guide to start swing trading. Open a trading account with a good broker. Deposit money you can afford to risk, not life savings. Learn how to read candlestick charts and price patterns. Choose one or two simple strategies to begin with. Step 5. Backtest your strategy with historical data. Practice on demo accounts before trading live. Start with small trades and slowly build confidence. Record your trades in a journal and improve consistently. Vest assets to swing trade stocks with high trading volume and liquidity. ETFs like SPY or QQQ for safer exposure to multiple companies. Tech stocks like Apple, Microsoft, or Tesla with clear trends. Commodities like gold, oil, or silver for strong multi-day swings. Forex pairs such as EUR, USD or GBP, USD for global trading. Cryptocurrencies like Bitcoin and Ethereum for volatility lovers. Avoid penny stocks and illiquid assets with unpredictable moves. The best assets are liquid, predictable, and easy to analyze. Swing trading vs other styles. Swing trading, hold positions for days or weeks. Day trading, enter and exit within the same day. Scalping, take tiny profits from multiple trades in minutes. Investing, hold for months or years with less activity. Swing trading is less stressful than day trading but more active than investing. It balances time, effort, and reward perfectly for most people. Each style has pros and cons, but swing trading is the most flexible. Building a swing trading plan. Define your strategy before starting any trade. Write clear entry, exit, and stop-loss rules. Create a watch list of stocks to trade daily. Stick to your risk management rules no matter what. Decide when to review your trades, weekly or monthly. Keep updating your plan with lessons from mistakes. A good plan removes emotions and creates discipline. Consistency and planning are keys to long-term success. Advanced tips to trade like a pro. Use multiple time frames to confirm signals. Combine chart patterns with indicators for stronger setups. Avoid trading during uncertain news events. Don't hold trades during earnings reports unless you accept risk. Focus on one market before trying multiple assets. Learn continuously from books, courses, and mentors. Track both wins and losses to improve your edge. Professionals focus on quality trades, not quantity. Swing trading is a smart and flexible way to grow your money. It gives the freedom to trade part-time without constant stress. Success comes from discipline, patience, and consistent learning. Always protect your money with proper risk management. Use strategies, tools, and psychology to trade like a professional. This course gives you everything to begin your journey today. Thank you for watching this complete swing trading video. Don't forget to like, share, and subscribe for more trading content.